Welcome to Nasdaq Trade Talks, where we meet with the top thought leaders and strategists in TradFi, digital assets, technology, and financial planning. I'm your host, Jill Malandrino, joined by Joanne Corkran, co-CEO and managing partner of Golden Seeds and general partner of Golden Seeds Venture. We also have Jeff Saviano, EY's emerging technology strategy and governance leader. And we have Asher Kraut, he's general partner with Generational Partners, to discuss emerging themes and venture capital investments for 2024. It is great to have everyone with us. Thanks for joining us on Trade Talks. And Joanne, before we get into key themes for 2024, let's have a high-level overview of trends that stood out in 2023.
Okay, so let me just start by saying it was definitely a difficult year for fundraising in 2023. Just for your listeners, Golden Seeds is one of the largest and most active angel groups in the U.S. So and we syndicate with everybody. So our experience is probably typical of the sector overall, and our flows were down a little bit more than 30% this year. And I think there's really three reasons for that. The first one is that our investors already have portfolios, and the typical paths of raising your next round, they are very much congested, as we've talked about in the past, as later stage venture in particular is, let's put this politely, digesting a whole lot of losses from 20 to 22. So people have to have some dry powder so that they can protect their companies if need be, because it's taken them longer to raise money. That's one thing. The second thing is that a lot of companies that are coming to us for funding have don't quite understand how much the market has changed from the crazy environment of 20, 21, and 22. So we can't come to terms with some companies. And the third thing is that for the first time in 15, 16 years, fixed income is viable. You're paid to wait, to take your time. So those are the three things I think that have caused flows to decline. But that said, I think we're seeing things that are suggesting that we're, if not at the bottom here, we're getting close to it. Volumes are back to where they were in 17 and 18, which for seed and pre-seed was essentially a decade running at that level before we went crazy during the pandemic. So that's one. And even though 2023 was a difficult year, companies got funded. We funded 5 new companies at least. 20% of our existing portfolio raised money. Half of those raised it in an up round. So yeah, it's been tough, but the market's not stalled. It's just slow.
Right. And Jeff, your thoughts around that? Was this, whether it's valuation reset, governance reset, was this something necessary that had to take place in the environment?
Well, and I just look at it, so interesting to hear a story, Joanne, to think about what 2023 was like and how much money still poured into artificial intelligence. And the hype is certainly real, and we're seeing that in many, many early stage companies. They're solving problems in different ways. A lot of that investment went into generative AI. And so, one of the areas that we're really focused on, as everybody is launching use cases and everybody's talking about it, it's hard to find companies that are not investing at any particular stage. We're getting really interested in the governance of all of that and how important that is. And we think these are board level governance issues. There was an important case in the mid-90s called Caremark that defines what board oversight responsibilities have to be, especially for mission critical areas of the company. And let's face it, we think AI will be ubiquitous throughout an organization. It's impacting every corner of an organization. So our board's ready. Our board's ready for that. Do they understand artificial intelligence? And I'll talk a bit later about the ethics around it. And we think that's incredibly important too.
Yeah, and I definitely want to touch on that, especially when you think about it from a VC perspective. Are you thinking of ethics when you're making these investments into companies that are leveraging AI? And Asher, let's get your thoughts on this as well. What do you think impacted VC in 2023 the most?
Yeah, to some degree similar sentiments to Joanne, but we're early stage investors. We focus broadly on industrials, and for us it's actually been a very, to some degree, fortunately exciting year. There is a lot of unfortunate things happening in the world, creating geopolitical and kind of macroeconomic pressures that I think you're seeing capital be drove into sectors like manufacturing to reshore some of the supply chain, logistics, energy and utility with the grid transformation being a hot topic, and of course AI and the ethics of that fit, all across the spectrum of what we do. So for us, it's been an encouraging sign. I think that we haven't seen valuations, certainly not at the early stage, compressed to where people maybe thought. And some of that will continue to trickle, but I think there is a lot of excitement on how things like AI, robotics, machine learning can really transform some of these legacy industries.
Which is so interesting because when you think about investments into manufacturing and the industrial space, I mean, they're all leveraging technology, regardless of what industry you're in. I mean, that's why there's such, there's such a drive for tech talent as well. Everyone's competing for the same talent.
Yeah, it's been interesting for us to see as well on that talent piece. How has talent from places like SpaceX and Tesla started to move into some of these other lesser talked about sectors like energy, manufacturing, logistics, and seeing that start to interweave with the Amazon talent, the Apple talent, and seeing the convergence of these two workforces that weren't previously happening, but I think with things like AI and robotics, you're seeing that more. And you're seeing a lot of innovation come as a result.
And that's what's so different, what's so exciting, I love how you explained it, that it's so exciting to us from a workforce standpoint, is that this is not like, call it traditional AI. I have a hard time referring to any AI as traditional, but pre-generative AI, if we can call it traditional AI, it was constrained to small groups within a company. It could be 10 or 12 people in the basement of a company responsible for AI. What's changed now is that everybody, it's so ubiquitous within the organization. We are all citizen developers, all of us. So that marketing manager at that industrials company is probably using it to draft his communications that he's sending out. And that, from a governance standpoint, we saw the statistic that blew me away. 50% of workers surveyed are saying that they're using generative AI at work. Okay, that's probably low by now. 70% of them are not telling their employers that they're using it. So think about the risks involved. Think about your company with a company a few weeks ago, 20,000 employees. So you just based on the numbers, that 10,000 employees are using it in their work, and 7,000 people are doing things that you don't know about and using it in their work. What risks in governance do you think would have to come from that? That is starting to concern us, and it's concerning boards too.
Yeah, well, I mean, cybersecurity, we could have a whole entire conversation
Absolutely.
around that. And a little bit off topic here, but you're also seeing the composure of boards include more cybersecurity professionals for that reason, because it really is a risk function more than a cost center than anything else. But we'll have a panel on that at another time. But let's talk about some of those emerging themes.
But I just, generative AI and large language models are one part of machine learning and AI. And that's a very different thing from a lot of the stuff that early stage people are funding, okay? People like us. We're seeing lots of companies come in that are using machine learning and AI, but they are using those ML and AI to work on really, to radically change business processes at a company, but using not huge amounts of data, using the client's specific real-time data. So for instance, we funded companies that do real-time scheduling for large medical practices, as opposed to having a call center in India do it. They're doing it. Yep. And the cost is going from $8 a call to cents, okay? And it's real time, it's the right answer. We funded a company that's grown hugely that answers real-time questions about leasing and property management for commercial and residential real estate holders. These are closed sets using a client's own data. It doesn't have some of the ethical concerns that these big models have. And
maybe not all of them.
Well,
I think that's fair. I think that's fair. I do, in our learning about ethics and AI, that I think you're right. In those closed environments, or if it's your data and you can control it a bit more, then it's a different set of issues. What we're finding is that the ethics matter. The reason that we believe it matters is that when we have board and C-suite discussions, the first question is, what are we legally mandated to do? That's fiduciary obligations to their shareholders. The world is slowly developing policies and regulations around AI. It'll happen, but it's happening slowly. As that matures, there's not a lot of legal mandates right now on management and boards for how they develop AI systems. Our hypothesis is that ethics matter more than ever. because if those laws are slow to develop, the ethical responsibility. I can give you some examples. So if you're a bank or financial service company, you use an AI system to determine whether a customer qualifies for a loan or not, do you feel the ethical obligation to tell your customer transparently that AI was used in that decision? That's a hotly debated issue. We may have 4 different responses to that question. My own belief is that there is an ethical responsibility. We study the ethics of AI for lawyers as part of an MIT task force I was on, and we were deeply divided on that question. Is there an ethical obligation to tell your clients when you're using the hand of AI in your particular product or service? I think there is, but we as a society and companies need to address these ethical issues, and I think AI is providing that canvas for boards to address ethics right now.
Maybe just to round out that response as well on this topic, which is that, as I mentioned, we're industrials broadly, but we've been, my partner and I and our team broadly, investing in defense for the last better part of a decade. And this is really not a new technology in the defense world. There are safeguards in place to mitigate some of this. Obviously, it's always changing. The landscape, every day is moving on what the technology can or cannot do, but it's been interesting for us to see that reaction from, I think, the consumer side, maybe more the legal side, so on, in the sense that this is a technology we've been using actually in the field for decades. Maybe not the sophisticated level that it's at now, but certainly to do image recognition, object detection, that's all done through some format of machine learning for years now. And I kind of share a similar sentiment. I think when you're in these safety critical environments, a lot of this has been mitigated. The way you develop product is in a risk mitigated way, and I think you'll continue to see that as the AI continues to develop.
Which is so interesting, because when you think about, this kind of gets into our outlook for 2024, but when you get into where do you want to make investments into companies, not even just talk about AI ethics, but ethics in general, and we've seen this with a number of publicly traded defense companies, where even if you think about it through the ESG lens, the products that they're developing are used as weapons of war in many cases. So technically that's an ethical question as well. Yeah. So when you think about your outlook for 2024, and I think the ethical debate is only going to get bigger from here, what trends, what themes, where do you expect to see outperformance in 2024?
Well, we talked a little bit already about using machine learning to solve really specific questions real time. The other thing that our investors are really looking at is they're interested in sustainability and green technologies. But again, the early stage investors, they're not going to get involved in big industrial infrastructure projects because they're investing $500,000, $1 million, and you need something where you can get a long way on a couple of $1 million. So some of the stuff that we're seeing in the sustainability area are, I don't know, things like measurement companies that are measuring ethical supply chains, companies that are measuring carbon footprints, that are helping companies comply with data requirements, things like that. Another thing that we're seeing a lot of is upcycling foods. This is a huge part of carbon, excess carbon, and upcycling, food, farm surplus, and fresh cut remnants and spent grain. This is 10% of all of the stuff that goes into a landfill. So we're seeing that. The other place where we continue to see interest is in medical devices and technologies. And in particular, early stage investors love that sector because a lot of these companies can get very far on grants that are essentially non-dilutive. A couple of things that we're looking at right now are polymers that can be used to store vaccines and biologics. So relatively low cost way to take the need for cold chain out of the supply chain. That's a huge cost and sustainability thing. And then this other really cool thing that we've been looking at recently is a company that uses eye tracking for a variety of diagnostics, but they now have a product that can check for active THC effects. So essentially a handheld device, like a breathalyzer, but for pot. So that's sort of exciting.
Talk about real-time, same-day drug testing.
Wow.
Are there any key themes that you think for 2024 that are going to emerge?
I do. I think it will be the year of the employee. I think we're already seeing that, especially sticking with the implications from AI, it starts with risks, and I talked about some of those, of the fact that employees are using it in their work. What are the company policies? What are the restrictions? And so everybody's getting some attention on risks from employee base that are using these generative AI tools. So that's the first. That risk focus, though, is shifting to enablement. How can you help and support that marketing manager in that industrials company,
Most
right?
definitely.
Yeah.
How could you enable that particular worker to do their job better? Sometimes we look at these AI systems as enterprise-wide. My own belief is that most of the value will come bottoms up. In that 20,000 person organization, enable 20,000 people. And the value from that may be greater than having one single AI system that comes from the top. So from risks to enablement to attraction. I was with the board of a Fortune 200 company last month, and the chairman of the board said, okay, I get the risks and I get enabling. I'm worried about attracting them. How am I going to convince Generation Z to come and work for me? We have to have a robust AI strategy, or else they're going to walk and go someplace else. I think especially for Gen Z, it's going to be about attracting them, but year the employee, focus on the risks, enable your people, and then attract that next generation to want to work for you and use AI in their work.
Right, and Asher, that's what we were talking about before, where you have all different industries, vying for the same tech talent. But something that you noted, the importance of national security is also driving some emerging investment themes. Tell us more about that.
Yeah, it's a topic that I think, where most people's mind gravitates to first is what are we doing overseas and things like this. But there's also a lot of, domestic security that gets done as well. We invested in a business pretty recently called Thread. They're automating the inspection and really asset management broadly of energy and utility assets. So answering and helping enable the frontline workers to not have to climb a rope and ladder to investigate what's wrong with a wind turbine before it loses power and then your home loses power or something like that. It's a big problem we have in California with rolling blackouts, and it's only getting worse with the grid. And so there's that element of national security, right? And then you ask yourself, how do we use that same technology to power a lot of our international, let's say, national security? Can we use that same technology to inspect the infrastructure of an Air Force base, for example? I'll give another example. We invested in a business that we haven't yet announced, but they are taking a similar mindset to using machine learning to automate a lot of architecture and engineering work. So imagine if when you wanted to build a multi-use building, you didn't have to be the engineer using the CAD tools to actually design it. You could tell a software what that should look like, and the software will optimize that for you. Your job gets a lot more creative. You're really enabling people. Yeah. And I think what I'll close on this segment for is something I have a big prediction on really in the decade to come, but in particular in 2024. The dominant business model for really the last 2 decades of venture, if not more, is software as a service, SaaS. And something I've seen, and perhaps this is unique to what we do, and maybe Joanne has other thoughts, but a lot of companies we're investing in and we're seeing are using these new technologies that have been sitting on shelves for a little while to empower their own internal operations. So instead of, let's say, selling a software to a customer, they're using that software themselves and providing that end service at gross margins that were just previously unimaginable. And I think you're going to see this business model continue to propagate through VC broadly, but certainly where we're focused.
Yeah, that's a big call on SaaS, Joanne. Yeah.
Yeah, and remember, he's working on industrial projects, which is a place where you're probably running an entire business inside the company that you can do that with.
Totally, yeah.
Many SaaS businesses are not focused on that kind of scale.
Right.
And those barriers, though, are really coming down. What's been so cool to see is that so much of the code now, software code, is generative AI influenced. And so that time to get to market, to launch a SaaS solution, we see the same trends of opportunities to deliver value through a software as a service.
Yep.
By using generative AI, you can materially cut down the time it takes to code and the effort and the resources that you need. So you can get products out to market faster. And the opportunity, the space we track has been the legal tech space. I teach a law school class at Boston University about innovation and advanced technology. We had 7 companies come in, and every one of them changed their business model in the last 6 months to infuse generative AI, changing not just the product, but the business model. And like that's how fast this is changing. They're using it in a way to bring more value to their customers and changing business models as a result. I was blown away by that.
And also just take cost out of their own business.
Absolutely. And
That's the biggest thing
It
to
is.
me.
Well,
Just
Well, and hopefully they can reinvest back into the business and create more jobs.
and protect the
the
workers.
other
hopefully,
thing
too.
about tech, you're talking about tech workers, one of the things that, another thing that happened in 2023 was because we saw lots of these large tech companies not be able to get the next round and have to lay off tens of thousands of workers, those workers have sifted back down the chain into smaller development companies. So it's actually been, that process has really worked, not
Totally.
just, and it's been great.
Something we've seen on that topic too is the concept of being a founder and starting a startup is ubiquitous now, right? Like 10 years ago, pre-seed didn't exist maybe, or at least not in the institutional way it does now. Accelerators weren't really a concept. There was Y Combinator, Techstars, maybe a couple other things. As you've seen that information sharing propagate so far over the last decade, you're seeing, and we're seeing a lot of people spin out of some of these corporates where they have a much better understanding of the customer problem set than any generic, let's say, software engineer. They've actually faced that problem. They're now spinning out. They're taking some of this other software talent, merging that together to build something really valuable from day one. And so we're seeing that a lot.
All right, Asher, Joanne, and Jeff, thank you so much for the insight. We appreciate you joining Trade Talks, and thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.